slight rise this morning in the U.S. stock market after yesterday's wild sell-off that led to the worst close in more than 2 years. The Dow lost more than 1,200 points yesterday, the worst day since June 2020. The sell-off was prompted in part by news that inflation in August was more than 8 points higher than last year. We go now to Joel Griffith, research fellow at the Heritage Foundation. Joel, great to see you again. A lot to unpack today when it comes to the economy. But first, I want to start with some news that broke this afternoon regarding Amtrak and it canceling some of its routes in anticipation of a possible railroad union strike. What do you think the likelihood is of a strike, and what type of impact will that have on the economy and the supply chain?
Well, with that Amtrak news, it appears that Amtrak is indeed positioning itself for that strike. They made some announcements that they're going to be scaling back some long distance routes, and that's only going to make matters worse. If you are trying to travel from New York to Boston or from New York down to DC, it's already can be a hassle. This is only going to make matters worse. But for the rest of the country, I think those impacts from the strike are actually going to be minimal. The big economic problems people are facing across most of the country are actually stemming from the trillions of dollars that were spent and printed and the 40-year high inflation levels that are really making it difficult for many families to just make ends meet.
Yeah, I want to talk now, Joel, about Wall Street and what we have been seeing in the markets. Talk to us more about that.
Well, yesterday we saw the Dow fall by about 1,100 points, the biggest one-day fall in over 2 years. And if you take a look at your retirement accounts, I think people are realizing it's not just a one-day market correction. A lot of stocks are down 20, 30, even 40% just this year. And this is really having an impact on people's futures. And this really underscores the problem that we have in this country over the past 2 years with the COVID shutdowns that should never have happened, and then Congress trying to make it seem as if we can get away with shutting down businesses and criminalizing people for being part of society. And then you had our central bank go ahead and make it possible for Congress to pretend the problem didn't exist by printing trillions of dollars. We are paying for that right now. Year over year, prices rose more than 8%, and that's on top of a more than 6 percentage point rise the year before. We're talking about inflation that is now approaching 20% since President Biden took office. And the Heritage Foundation estimates that the typical family now is seeing about $6,000 less per year in terms of real income as a result of the sky-high inflation.
Yeah, Joel, yesterday there was a big celebration at the White House, but not too many Americans are actually celebrating at their own homes these days because of inflation. As you mentioned, showing no signs of coming down. Meantime, the White House is pointing to lower gas prices and that inflation is dropping at least a little bit from where it was over the summer. Your thoughts on all that?
Well, two things. Number one, of course, I'm happy that gas prices have come down a bit over the last few months. Unfortunately, those prices are dropping not because we're producing more, but because we actually are in the midst of an economic slowdown. We are in a recession right now. The economy shrank during the first 6 months of this year. And when you have demand go down for a product, even if supply is constricted, you see lower prices. Unfortunately, longer term, the Biden administration is ensuring that we're going to be more like California and Germany, and they're paying a lot more for electricity and for gasoline than the rest of the country is. And that's because the Biden administration is shutting down pipelines. They're banning drilling on a lot of federal land, and they're making it very clear to oil and natural gas companies that over the next 10 to 20 years, the goal is to put them out of business. And second of all, energy prices are just a component of the overall basket of goods and services that we need. And it's for that reason that in spite of gas prices coming down over the last few months, we still saw prices overall rise. And the official numbers aren't even capturing the severity of the problem. For instance, the official numbers say rental costs increased 6% year over year. But that's because there's a big lag. If you talk to somebody who's looking to find a new apartment right now to lease, it's 30% more today than it was a year ago. And if you're looking to buy a house, your mortgage payment today on just a standard home is 60% more than just 12 months ago.
Well, Joel, we have to leave it right there. Thank you so much, as always, for weighing in. We appreciate it.
Thanks for having me tonight, Trace.